3, 2, 1. This is Own the Block podcast, and these are your hosts, Josh Derriman and Pierce Burton.
All right, welcome to the Own the Block podcast, episode 5. Today we got Grant Marple on. He is the EVP of Atlas Title. How's it going, Grant?
Good. How you doing, Pierce? Thanks for having me on, guys.
Yeah, so real quick, just kind of give us a quick summary on who you are and what your involvement is with the company and all that sort of thing.
Sure, absolutely. So yeah, title insurance is the background. Started in the sports industry on the personal side for Major League Baseball with the LA Dodgers. Was fortunate to have a friend kind of introduce me to this space about a decade ago, and been at it for about 9 years now. Had the opportunity to help launch Atlas Title Company as the first California underwriter in about 2 decades approved in California. And we've been up and going for about 2 years now, so it's been exciting.
I didn't realize that it had been that long before there was a new title company.
Yeah, so the key difference is we're an underwriter. The other, I think there's about 9 out there that are all publicly traded. There's a couple that are privately held. It's a very mafia-like industry, hence why we were able to kind of get in here and create an opportunity for lenders, realtors, consumers to save a little money. Being the underwriter is really the key differentiator.
So if we don't represent you in a good way, you're going to come after us with the mob there?
Yeah, basically. No. The mob's coming after us.
Yeah. We just met and already getting threatened there.
Yeah, we're already in trouble.
Grant, let's start off with some basics. What's the role of title and escrow in a transaction?
Yeah, great question. So title insurance, there's 2 different types of policies. One that's protecting the owner and the purchase of a house, and then one that protects the lender. You're basically just determining that whatever you're buying the house for, there's no liens, meaning you didn't pay the mechanic, we made sure it was paid. So on a simple way, we're protecting that asset, making sure that it's free and clear, and that there aren't any liens that you're basically inheriting when you acquire that property.
So Grant, go ahead.
For most consumers, Josh, they will never understand title insurance or care to understand. It's typically there when you need it. And a lot of times, I joke with folks, it's at the end of the closing table when you're paying the closing costs and your realtor or lender says, hey, this is the title and escrow. 9 times out of 10, most folks don't even ask what they're paying for. Guys like yourself, Josh, I'm sure, experts in the field take that time to educate folks and say, hey, we've partnered with the company that's going to save you some money. At the end of the day, the insurance is the same regardless if you use Atlas or you use one of the larger title companies. We're just able to come to the table with a little bit more of a discount.
Grant, I can tell you exactly how many people on our side of the business read through the title insurance, and it's 0.
That's fair. That's absolutely fair. I joke, my mom still today is like, so what do you do again? I've been doing this 10 years. With title insurance, I'm like, yeah, it doesn't, do you got an hour? Are you bored? So I tend to just pass through it. But I will say in today's environment, as you guys are probably experiencing, different things are popping up, right? The loans that are coming through a little trickier, which means there's a little more hair on them in terms of our world. Lower credit scores, different type of borrowers typically lean on a lot more title cures or different things that we have to clear in order to make sure that the lender's clear to close and that the owner is able to sell their house. So definitely getting in a little bit more of a space where we're seeing some more stuff pop up.
Why is title insurance important, Grant?
Yeah, great question. So I would say the biggest reason it's important is to make sure your largest asset you ever acquire is really fully safe and that that you're owning it. Back in the day, not to bore you, but title insurance came into place for a reason that someone really couldn't come and take your house from you. We verified that you were the owner, but the owner didn't have anything that tracked back to that old property saying that needed to be paid off or cleared. So definitely an important aspect. I think where most people get confused is, why am I paying for this, right? Like any insurance. Why am I paying for this homeowner's insurance? Why am I paying for my car insurance? You typically don't need it, but when you do, it's there for you. So it's a small price to pay for kind of what you're getting over the life of your property.
When we're going out into the marketplace, what should we be looking at to find a good, competent title escrow company?
Yeah, Great question. So a lot of folks, it's a relationship based, right? So I joke that our job becomes inherently important when something goes wrong or something comes up that needs to be taken care of. So first off, I think brand awareness is a big deal, but for us, consumers are looking for price, right? If you're getting the same price somewhere else and it's 30 to 40% more expensive, I'm getting the same insurance policy. We are seeing consumers, realtors, lenders come to us, seeing that we're saving them, anywhere between $2,000 to $5,000 on a purchase transaction in California. And so I look at it as a consumer going into this market of, we're seeing Google searches of why am I paying this? Why am I paying for this insurance? Why am I paying for the loan officer? Why am I paying for the real estate agent? What does this mean? And so we've been transparent about educating folks on why they're paying for it and that they have options out there. I would say 90% of the industry is really controlled by 4 companies. So a consumer, realtor, lender, in most cases haven't really had a choice. So it's kind of a tough question, Josh, when you say what should they be looking for. The reality is most people use one of those 4 companies based on location or proximity to the property. In today's world, to be honest, we deal deals with 34 states. We have 3 offices. We're closing deals remotely, and the world's changing where borrowers will meet in an office with a mobile notary or meet in an office in another state if they're on vacation. So I think the world's changing on why they work with who they work with, and it's really why we exist, being a brand new company.
Grant, you brought up something interesting there. We deal with a lot of investors, and this podcast is directed towards investors. And a lot of people don't know that they can close with a mobile notary to this day. And so talk about that process in relation to buying out-of-state real estate properties.
Absolutely. So yeah, our entire existence and our signing process today with investors is based through our mobile notary network. So Josh can be in Tennessee and closing on a deal in California on vacation, and we can send someone to the Starbucks around the corner that's certified to go through those documents and get those signed and then shipped or scanned back and fund that same day. And so I think old school, Pierce, if you think about title, legacy, they got brick and mortar offices on every corner because that person used to go into that bank and talk to the teller, and then they would go next door to the title and escrow company and sign those docs. And that's just all they know. So in today's world, there's even electronic remote online notaries in certain states where we can do the whole signing just like we're talking right now, where there's certification, verification. It hasn't hit California yet. That's one thing that we're preparing for someday, to have some type of remote online notary. And I think, the last 2 years, people working remote, it's presented that opportunity even more so to move forward with some legislation to get approved. Because I think consumers at the end of the day want convenience,
Yeah, I had a client we closed out maybe 2 months ago, and the guy goes, yeah, I really need to know what day we're going to close because I have to plan to drive up to the title company, which is like 4 or 5 hours away. And I'm like, you don't need to do any of that. They can get a mobile notary to you. And he was an older gentleman, and he was completely against doing things that way. But that definitely is the way of the future, especially if you want to, function at a high clip as a real estate investor.
Now, Pierce, we've had some title companies where they've actually resisted doing mobile notaries. They want the person in their office, and that's sometimes been a challenge. It's funny how that works. Now, Grant, I wanted to tell you a story. It may predate your time in the industry, but when I got into the industry, it was really funny. The title company was really an afterthought for me as a loan officer. They were the guys that would call me up and say, hey, we got a 4-pound lobster, come on by. Or, they was like, hey, we have a champagne buffet over at the title company, come on by. And so things had to change. There was a lot of kickbacks going on and crazy stuff. And that is absolutely not the case anymore. The pendulum has switched so much so that if you even say hi to your escrow officer outside of the office, they might get in trouble.
Yeah, it definitely shifted, and it was about a year or two before I got into it. But I joke when I was at the LA Dodgers working there, a lot of title companies were clients of ours, and I used to wonder, like, what are these guys doing all the time? Taking people to games and whatnot. And it's definitely shifted in terms of kind of what we perceive as value in a partnership. And that's, really for me why I came to Atlas, because I felt like, we had a differentiator and not only price, but control and service at the end of the day. Us being a little bit smaller, we do have everything in-house from underwriting to, IT to operations, you name it, it's here done under our roof, rather than, some folks are sending this to a different state or relying on something over here. So, it shifted in terms of the mindset and the loan officer's perception of value or how they interact. And then, vice versa, I think we as a group have tried to put together different tools or educational things. Like, I think 8 months ago, we launched a program called the Atlas Title Buyer's Advantage. And if you can think about it, Josh, there used to be 8 to 10 offers on every property, right? And listing agents would have basically pick and choose 2 hours the house was sold. Things have obviously shifted from that dynamic. But at the time, we put together a program called the Atlas Title Buyer's Advantage that we were having our lender partners and then buying agents write us in on every offer, saying they're going to pay 100% of the title and escrow fees. Every listing agent was getting that offer saying, everything else being equal, this is $8,000 back to my seller. They're traditionally paying for half the title and escrow. If the buyer is going to pay for it, we're going to go with that offer. And we saw about 40 transactions get accepted in 3 months just through that program. So that's one thing that we've done to try to get creative with the market changing and really looking at the closing cost aspect. And I joke with realtors all the time. I go, when you're at a listing presentation or an investor or whoever might be in front of someone pitching a transaction, how many times do you bring up closing costs? And I go, specifically title and escrow. Never. You know why? Because traditionally they've just thought, hey, the pricing's the same. You're going to get pretty much the same from this group as you would this group. So why bring it up? Now we're having these younger agents really educate folks and say, hey, we partnered with these guys to save you $3,700 on this transaction. And there's a little more value in educating folks that way. So.
Now, Grant, I know part of your business model at Atlas Title is that you do provide a very good price. Can you talk about what your differentiation is?
Yeah, so the biggest differentiator is specifically in the state of California of us owning a title insurance underwriter. I mentioned we're kind of one of the few privately held underwriters in the country in the state of California. We don't resell our insurance to third-party title companies. We only underwrite ourselves directly. With that, we're able to control our price. So about 30% more competitive there.
So real quick, for those of our listeners that maybe do not know the whole title and escrow process in full, can you kind of explain just a step-by-step of everything that you guys do within a transaction, Grant, to make sure a real estate transaction closes?
Yeah, absolutely. So we'll kind of start from the top of opening escrow per se. Within 24 hours, typically this will go back to your real estate agent or lender with a title report showing what's on title. For example, the number one title claim that we see is mechanic's lien, meaning that homeowner or borrower didn't pay the mechanic and they've gone to the county's office and said, hey, I need to get payment. So we'll issue or resolve something like that on the title side. From there might be a number of payoffs that need to be made throughout the escrow process. We're tracking down to subordination. If someone has solar on their property, we'll need some type of solar documentation from the solar company. And then from there, the escrow piece of really is exchanging the funds and then coordinating, as we mentioned, that mobile notary to close the transaction. So from a consumer standpoint, a lot of folks don't really see the behind the scenes piece. It's more interaction with the lender or investor involved. But in a nutshell, that's really where it's at, Pierce, from clearing title to holding funds to releasing funds and to paying off that old loan for you guys.
At the end of that transaction, can you explain how that mortgage payoff works? I get a lot of clients who are like, are you going to send the check thinking I somehow get the money in my bank account, right?
Yeah, no, absolutely not. So yeah, we would make that direct payoff to that existing lender. The nice thing, escrow, we really rely on instructions from the lender. So we don't do anything outside of the box unless you guys tell us. So we get an instruction from you or the real estate agent saying do X, Y, and Z. And that's exactly what we follow, called kind of escrow instructions or lender instructions in some cases. But yeah, it's a great question, and I know a lot of people probably wonder or curious kind of how that works.
So Grant, I used to do my own title or title searches when I used to buy foreclosed properties. And so I'd like you to kind of kick the door open a little bit and describe what the process is at a title plant and how they come up with what's on your reports.
Yeah, absolutely. So to dive into the weeds of that a little bit, the nice thing is these days a lot of the title access, plant access that you would refer to, a lot of it's data driven now. So a lot of it's online records. There's obviously certain counties that we actually have to go and rather go to the county and see what's on the actual plant to see, hey, is there something that's showing on this particular property or this lot line that we need to look at? Probably 90% of our records today, Josh, are done electronically through data-driven tools. A lot of the counties have come up to speed with that. One of those things that's kind of really transitioned through all of this is like e-recording. It's another facet to the transaction of, can you e-record in certain counties? They kind of coexist together. The tough part is with anything, we would like to fast forward a lot of this technology and not have to go to the plant. But the reality is we rely on counties and different offices throughout the country to really come up to speed with this stuff. So we're kind of handcuffed in that way, but anything that's available via data pull or online, public record, we're using all of that today on the back end to really fulfill what we're showing for that property.
So can you talk about what are some common misconceptions on what title insurance does and does not cover?
I would say the biggest common misconception of title insurance today is that you don't need it. I think that's been prevalent in the last, I would say 7 years. There haven't been a lot of claims. And so most people think, hey, why am I paying for this? Why do I need this? I haven't had a claim. I would say we haven't really been in a foreclosure or a market that would present anything, because as you refinance, right, a new policy comes into place, which then basically eliminates the risk for the title company. So I would say the biggest misconception really is that you don't need it. And at the end of the day, it's something that's a requirement from us by, whether it's Freddie or Fannie, whoever's buying the loan on the back end, which, like I said, on a high level from an investor or a borrower, they aren't really, to your point, Josh, have never even looked at a title insurance report. So our position really is, hey, we are basically giving you the requirements that your investor, whoever, is dictating it. In some cases, it's this type of policy. In some cases, it's a junior loan policy that might be a little bit less riskier for a home equity line of credit. So definitely misconceptions around like why you need it and is it necessary.
Grant, got a funny story for you that actually just happened to me today. I'm negotiating with a for sale by owner contract on a purchase of my own for a rental property. And our negotiations led to the seller saying that he would pay for all title fees, insurance, all that type of stuff, right? And but then he goes, but I want to use my title company because number one, he didn't want to use a mobile notary. He wanted to be able to drive into whatever title company he uses. And number two, he wanted to know, he knows what their fees are, right? And this is a guy that owns quite a bit of real estate. But so I called the title company just kind of to vet them and make sure they're going to be able to get the deal closed and all that type of stuff. And I'm asking them what the fees are for title work. And they tell me the fee for title work. And I was like, that sounds really, really cheap. Does that have an owner's policy in there? And they go, no, we don't recommend you to even pay for or buy an owner's policy unless it is a foreclosure, which floored me that they would actually recommend that to their clients.
Where I'm curious, yeah, that would be news to me. I haven't come across that scenario either, but I'm sure. What state was it in?
Mississippi. So I think that tells you all you need to know.
Wild west out there for sure.
Pierce and I had a good chuckle about it.
Hey, you come across. I will say our industry as a whole is legacy is probably the right word, but there's a lot of folks. I think the average age is like 58 in terms of underwriter and how they've operated. If you would have told me 2 years ago that we could have sent title and escrow people to work from home, there's zero chance that would have happened anywhere in our industry. Yet here we are with, a decent amount of our staff working remote and in office if they want to. But it's just another way of how the industry is changing, and a lot of these local companies have been in the same kind of, like Josh said, serving lobster at luncheons, for the last 30 years, and it's kind of what they're used to. So
Yeah, any crazy stories from you, Grant, at all?
I'm trying to think of anything. We usually get some pretty unique scenarios with, different things coming throughout. Nothing that comes to mind that's worth sharing right now. Our eventful stories are usually, uneventful to say the least. Title insurance is not sexy by any means. As much as people try to spice it up, I joke with our team. It's something that is needed and necessary, but no one's writing home about it, and that's part of the reason, frankly, I'm in this space. Not to go on a rant, but everyone and their mom wants to be a real estate investor. Everyone and their mom wants to be a loan officer. They don't realize how hard it is to get the level that you guys are at, right? It takes a lot of work. It might look easy. Oh, I can do loans. I can sell a house here and there. We're seeing a max exodus of people out of the space, just canceling, license and looking for other opportunities. So that's more on a tangent of, I think there's going to be a lot of opportunity in this particular year to double down in whatever market that you're in, and come out on the other side a little bit stronger. So,
Grant, can you touch on how often title insurance pays out and why that might be paying out less currently than it will be in the future?
Yeah, definitely. And like I said, this is more of a broad scope of the industry, not necessarily specifics, but I do think at the end of the day, there's this conception of it costs too much, right, Josh? Where it's like, people are like, why am I paying this $4,500? The main driver to that is you have to look at who owns the pricing, right? I mentioned earlier there's 4 companies that own 95% of market share. So to some degree, it's partially to that, right? There's not many newcomers coming in saying, hey, can I offer a discount at the same type of liability insurance? At the same time, yes, people talk about a lot of times, hey, do I need this and why? And how often do claims come up? The claim question, there's a generalization across the industry, and I can't speculate on each individual underwriter. It's on their trainings of investor letters. For us specifically, it's really a key reason why we have good underwriters. We're going to make a judgment based on prior policy or that borrower and say, yes, we will remove this or we will insure this. But that's based on that individual underwriter and that insurance company. A industry as a whole, as you can imagine, don't want to play claims, right? So they're going to do CYA as much as they can to make sure that the lender clicked this, the borrower did this right before a claim comes in and they push it back. I will say, for what it's worth, it is one topic that our industry as a whole is very broad about, because there's no specific answer. I would say the last 7-8 years, claims are somewhat lower, but if you go read any earnings calls at any of the publicly traded companies, they'll talk about the millions of dollars in claims that they pay out every year, which is a real thing, right? So it's all relative to the company and how many deals they're writing or overwriting or underwriting or taking on that risk. I would say the biggest concern, though, is the price of it, and that really is driven by who's controlling the price. That's really a hot topic in terms of price and why, right? And people just understanding what am I getting this for? So what we actually did last year, if you go to our website, atlastitleco.com, there's a number on there that we've shown how much money we've saved consumers on average in California. It's over $4 million in the 2 years since we've really been around. We have consumers that find us now that are introducing us to their investors or agents saying, have you heard of these guys? And they're like, to your point, Pierce, earlier, like calling in saying, hey, like, how are you guys charging like what you're charged? They don't understand it until we have the conversation of, hey, we own the underwriter, we dictate the pricing. You're used to living in Modesto, California, and you got 3 title companies to choose from. They kind of give up. Like, cool, we'll just go to the next guy, right? And for what it's worth on that side, those 3 companies know they can give you subpar service and charge you whatever you want because you can't go anywhere. Who else are you going to find to get a title insurance policy that isn't local, that isn't going to close on time? And they're more concerned on closing the loan or closing that transaction to even, look at other options per se.
So a question that comes up often, Grant, because we deal with so many investors, is they'll buy a property on an investment property specifically on a conventional loan. And when you're closing a conventional investment property, it does need to close in that borrower's name. But then they can transfer title after the fact into their LLC's name. Can you talk about how that process can go down for those that want to own their property in the name of an LLC?
Yeah, definitely. And it's interesting. That's a common question, believe it or not, people ask is, hey, can you guys move it into a trust? What's your guidelines? Because not every title and escrow company will actually do that. The biggest thing that we look at, we aren't lawyers, right? So we're a title and escrow company, is if it's already in a trust today, we will move it into the trust, right? It's an easy deed to the county saying, hey, here's the new owners. I think it's becoming more and more common. The one thing that we won't do is add an additional name that might not be in the trust. That's where we rely on the attorney. So all day we do it. I know Josh does these deals often. In some cases, like I said, not everyone enjoys doing it or thinks, hey, there's risk involved with it. But yeah, in the scenarios that it's appropriate, we can accommodate it all day. It's typically after closing. We'll give them, some information to record, or we'll help do a recording assist per se with the county and submit it. But yeah, it's just educating people because they get, oh, well, this guy's done this. And I'll tell you this, title companies and escrow companies make exceptions for different things all the time per se. But they're not going to publicly advertise that, right? If we did accommodations all the time for free, the team would be busy doing accommodations and not closing deals, right?
So Grant, because we're so focused on property investors on this podcast, can you talk about anything that you might think that a property investor should be concerned about with regard to escrow, with regard to title, what they should keep their eye out?
Yeah, it's a good question. Just thinking in our experience, I would say most investors we work with are on the residential side, so I'll preface it that way. We recently kind of launched our commercial group. From a title perspective, sometimes they want to look at easements early on, right? And take a look at the property lines, make sure that they're actually getting what they are acquiring in terms of a full-on lot lines. And that happens more often than you think. An investor will say, hey, we want to get the full lot line. Can you guys pull the APN and see what we actually are acquiring? In some cases, like in remote destinations like Northern California, up towards Auburn, that area, a lot of times they'll say, oh, you actually own your neighbor's quarter of an acre due to the APN. And so they'll come to us as a service. We have a nationwide kind of data tracking that shows, property records and anything that would be a public record. And most homeowners want to know kind of what they're buying. So from an investor standpoint, Josh, I think it is something to look at to make sure that when you go buy a house, a lot of times in remote areas, I'll preface it that way, there might be more to your property than you actually think just by identifying that through your title company.
First thing I did when I bought my first house is knock down the fence and just take over the easement that was between me and my neighbor's property.
We had one the other day in Northern California that was talking about like ditch water. I don't know if you guys are familiar with like a ditch line, but he was concerned that him and the neighbor kind of share this ditch line. He goes, I don't know who actually owns it or not. Like if I sell someone, from the Bay Area that comes in and says, oh, this is my ditch line. So it was one thing that we kind of helped them navigate and realizing it was in this particular area, like the city owned the ditch line. So there was no ownership with that. But we get a lot of weird, I would say more bizarre kind of scenarios like that with investors rather than, I would say 90% of our volume is just traditional refinance purchase transactions, non-investor deals per se.
Now, Grant, I see a lot of people when they get their title reports, they don't actually look at them. They don't look at easements. They don't look at plat maps. They don't look at things like that. And then maybe something comes up, and then they'll come back to the title company and say, hey, the lot lines are messed up. I wasn't aware of this easement, or we have some issues regarding that. And then they may get upset when the title company pushes back. Can you talk about what those potential issues are and whether title covers it?
Yeah. So yeah, great question. So what we typically always do when something like that comes up, Josh, we look at the previous policy, right? We touched on it a little bit earlier. How is this insured? What did they insure? What closed with the county, right? And from there, there's typically a discrepancy with the county and the homeowner that needs to be readdressed. So in some scenarios, what we typically do when we send out a report, we send out something we call our first look email, which is basically dumbs down the report. A title report can be exhibit A and B and 30 pages, right? No one looks at it. So within 24 hours, we send out our first look email that basically identifies some bullet points for you as a loan officer or loan officer assistant to look at and saying, hey, here's 3 red flags that we need cleared in order to clear title. That way we don't get to the end of the closing table and no one's looked at anything and said, hey, WTF, what's going on? Why are we going to need to subordinate this? It's going to take 14 days with Bank of America. And then, you got a loan lock that we don't know about, and we're pushing the loan now, and he doesn't qualify because no one looked at a title report. And so what we've done early on is just say, hey, here's a separate PDF within 24 hours that you're going to get to look at with, here's some red flags on our standpoint. How do you want us to proceed? And I think that's one of the misconceptions that people have is we send the report, but we're actually looking from the lender's perspective, the investor, to actually provide us documentation in order to clear it. And that's where our communication starts.
If I'm a consumer, Grant, and I want to have the best source to be able to maybe find some title information on a property, I'm not yet under contract, but I'm trying to evaluate a property to make an offer. Where's going to be the best source for me to be able to do that?
So I would first start, if you're a consumer, I'm assuming you have a loan officer or a real estate agent that you work with. I would go to someone like Josh and say, hey, I'm looking at this property. I want nuts to soup everything on it. Someone like us at a title company could send them what we call a property profile. It's going to have everything of public record on that particular property, from what loan do they have, what interest rate do they have, to everything that you can imagine that's a public record. From a consumer standpoint, that's your best bet, is going to your professional, whether it's the lender, a real estate, realtor in some cases, and just asking them, and they'll be able to give you the whole shebang. There really isn't too many resources outside of that. You could go to probably a OC register or kind of the county's offices, recorder's offices, and pull information that way as well. But that'd probably be my best suggestion.
Grant, when I was doing my own title work, which was super dangerous, but I'm a smart guy, I saw many times where we can debate that for sure. I would see people, they would buy property at foreclosure and they'd be super excited, and then look around and someone would go, you just bought a second. Or you bought something with a tax lien on it, and so you bought something with a $200,000 federal tax lien, or all kinds of other potential things on it. And so you can do a clean search at a county level on your own, but it won't necessarily catch everything, because the grantor or grantee index may be totally fine, but something was recorded improperly, or it misspelled somebody's name. And so that's where title insurance really comes into play and helps you. It can be it's a little bit of the Wild West.
I agree, and it's funny, one of the things we get all the time, Josh and Pierce, we do a date down at the end of every closing, right? So we run that title search up front to see what's there, and then really within the last 48 hours about to close, we run a date down, basically another search to see if anything else has popped up, like a child support lien that could be thrown on at any time. At that point, that could potentially hold up a closing, right? Saying, hey, we got this lien that just popped up from the county, we got to address it. Does it verify it to the same borrower? So to your point, if you're an investor out there looking to acquire, we're getting calls about NODs right now, right? Notice the defaults. People are looking for different lists. Definitely take your due diligence. You can work directly through a title company if you're an investor, obviously, if you have a relationship, and they can provide you what we call like a pre-opening of a title report, which is basically you're gonna you're going to go live, or you're going to purchase the property, or you're going to list this property, and we'll get you that report before you guys go live. And that's going to have everything that you need in order to make a decision if this is something worthwhile.
So, Grant, something I want to ask you before I think we're almost out of time and ready to wrap this up is, you don't really know me that well, but I played in the NFL and then, obviously played college football. How do you think, for those people who are thinking about getting into the real estate industry, whether it be title, mortgage, real estate agent, how do you think being in sports, and I don't even know what your job was in sports, helped prepare you to really get into this industry? Because I think there's a lot that coincides with each industry.
And I can tell you, I wouldn't trade anything for my experience there. I would also recommend anyone that has that background join the real estate space. It really is a team effort. I look at the team I work with today, 90% of them played sports, right? And it's funny, Pierce, he said that. He would hate for me to say this, but I was just having lunch with the buddy, Zach Sudfeld, that played tight end for the Patriots and Jets, and he's looking at getting in the space right now. We were talking about this, and I'm like, there's so many different industries out there, medical sales, you could go down a number of things, but real estate, at the end of the day, lending money, title insurance, it all coexists together, and it's not going anywhere, right? There's not too many things that you can do collectively with like-minded people to have this type of income, and not only income, but long-term sustainability with, like-minded people. I mean, I joke all the time, when I got out of that space into this space, it was the hardest transition of my life, because I was with 30 guys my age that all we did was talk sports, and I went into an industry that was 60 years old, that no one wanted to help anyone and sounded super boring. And now we've kind of created, a team, and we're very competitive.
And that's the biggest problem in this space for sure, is there's really no formal set of training set up. You kind of just have to jump in head first and trial by fire.
And 1,000%, I started, that's kind of how I got into it. And now, I think most of our sales team is somewhat of a younger age group, but at the same time, we're able to kind of relate within a 10-year window of, hey, this is what you need to do, this is why you need to do it. And it's like anything, who you work with matters, and if you enjoy the people you're around, whatever you're doing, you're going to enjoy. I mean, it's simple, but at the same day, I got buddies that are still in that world that are calling me like, hey, maybe we should think about doing something that you're doing. And for me personally, it was, everyone needed title insurance, everyone needed escrow, right? Just like everyone needs money, Josh, right? Like, money's not going anywhere. You got to get a loan, you got to buy a transaction, and it's doing it with people that really provide value at the end of the day and are like-minded.
All right. Thank you, everybody, for joining the Own the Block podcast, episode 5. Thank you to our guest, Grant, and until next time.
Thanks, guys. Appreciate it.